Risk appetite is firmly back on today, with buyers emerging across multiple asset classes. Welcome to MTRS_Market Pulse. Here is your India market briefing for July 31st. We cover the Nifty 50, Sensex, Bank Nifty, and the stocks dominating headlines today. Let us start with a snapshot of the Indian equity markets today. Starting with the Nifty 50, India's benchmark large-cap index. Nifty 50 is up plus 1.38%, trading at 24,317 Indian rupees. Equity markets are responding to reports that S&P 500 ends higher as investors await tech earnings. The near-term technical picture for Nifty 50 looks constructive. Watch the $25,290 level as the first meaningful resistance zone. A close above there on decent volume would be an encouraging sign for bulls. As always, this is analytical commentary, not financial advice. The Sensex, tracking India's 30 largest blue-chip companies. Sensex is up plus 1.51%, trading at 77,928 Indian rupees. Equity markets are responding to reports that S&P 500 ends higher as investors await tech earnings. The Bank Nifty, India's banking sector barometer, is closely watched by traders as a leading indicator for the broader market. Bank Nifty edged higher plus 0.69% to 57,148 Indian rupees. Investor sentiment is being shaped by India's RBI allows differential rates on bulk deposits at banks based on liquidity risk. With Bank Nifty moving sideways today, the market is effectively waiting for a fresh catalyst. The $58,576 level above and $55,719 below are the levels to monitor for the next directional signal. Now let us look at the stocks making headlines in India today. Hindustan Unilever surged plus 4.21% to 2,107.90 Indian rupees in a significant session. Investor sentiment is being shaped by S&P 500 ends higher as investors await tech earnings. From a momentum perspective, the next key resistance for Hindustan Unilever sits around 2,234.37 Indian rupees. A sustained break above that level could attract further institutional buying. The main risk to the upside scenario is a shift in macro conditions or central bank tone. This is our analytical view, always do your own research. HDFC Bank is up plus 2.52%. Trading at 753.95 Indian rupees. Investor sentiment is being shaped by India's RBI allows differential rates on bulk deposits at banks based on liquidity risk. Credit growth moderation is deliberate. Management is prioritizing the credit-to-deposit ratio improvement over top-line growth. This is the right call for long-term quality, but near-term earnings growth will be below historical norms. Watch for any signal that the CD ratio has normalized, as that unlocks reacceleration. Infosys made a dramatic move today, surged plus 4.47% to 1,155.10 Indian rupees. Equity markets are responding to reports that S&P 500 ends higher as investors await tech earnings. The annual revenue guidance range is the single most important event. Any upgrade above the current midpoint is a catalyst for the entire IT sector. Cobalt AI platform deal wins are the differentiation story. Watch the large deal TCV and the revenue conversion timeline. Now let us look at the macro backdrop for Indian markets. The rupee is weakening against the dollar, trading at 95.67. A softer rupee compresses margins for import-heavy sectors like oil, consumer goods, and airlines, while IT exporters like TCS and Infosys benefit. Equity markets are responding to reports that S&P 500, NASDAQ futures edge higher ahead of Fed decision, chip stocks wobble, WTVB. Foreign institutional investor flows are the near-term swing factor. Any risk-off in global markets tends to amplify selling pressure on Indian indices given the high FII ownership in Nifty 50 constituents. The biggest mover in India today is Infosys. Infosys made a dramatic move today, surged plus 4.47% to 1,155.10 Indian rupees. Equity markets are responding to reports that S&P 500 ends higher as investors await tech earnings. The Cobalt AI deal pipeline is growing, but revenue conversion takes 6 to 12 months. Near-term earnings momentum depends on existing account mining. Watch for any guidance revision commentary ahead of the quarterly earnings. The whisper is that the management has become more conservative than warranted. Let us close with the key events and catalysts on our radar. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. Every morning, before markets open, we break down exactly what is moving and why. If you want that edge every day, subscribe and hit the bell icon. If today's analysis was useful, a like is the best way to support the channel. We genuinely appreciate every single one. We read every comment. Drop your view below. That is all from MTRS_Market Pulse for today. All analysis is for informational and educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor. Trade safe, and we will see you in the next one. That is your India market briefing from MTRS_Market Pulse. Subscribe for daily coverage of Indian and global markets.